Good afternoon, my name's Craig Earl, market analyst at ALPARI UK. Welcome to our daily update on the markets. Today the focus has been mainly on the US, where we've seen three key pieces of data come out so far this afternoon. We've seen Q1 GDP figure which came out around 1.9%, exactly as we expected to see following a very strong Q1 in the US. We've also seen the ADP non-farm employment change which came in a little lower than expected. We came in at around 133,000. We were expecting a figure of around 150,000, following on again from Q1 where the figures were more above 200,000, but given the fact that last month's figure was around 120,000, again, it's not really that much of a surprise to the markets that we've seen a figure around here. We've also had the jobless claims for this week, again, slightly higher than expected. They came in at 383,000. We've seen a pretty consistent figure around 370,000 over the last few weeks. Excuse me. But this figure is not something to be overly concerned about. And again, as this has been reflected in the markets, we had the European indices earlier on today trading slightly up, having paired some of the losses from yesterday. However, all indices across the US and Europe as of now are currently trading down by around 0.5 to 1%. But again, it's not too much of a concern as the major focus is still on Europe. Europe is still in the back of everyone's minds, especially the situation in Greece with the upcoming elections, where we have the upcoming elections on June 17th. Now, we've saw polls at the weekend which improved sentiment amongst investors because they found that New Democracy, the pro-bailout party, took a lead in the polls over Syriza, who opposed the austerity, who opposed the bailout, and could essentially lead to a Greek exit if they do win the elections, do form a coalition and tear up the bailout agreement as they have promised. But this lead by New Democracy did provide an improved sentiment in the markets, and therefore we've seen the indices rising all week. However, we've seen polls out throughout the week now which have told many different stories, which has led people to pay much less attention to them. Yesterday we had Syriza leading in the polls by about 4%, and then today we've seen New Democracy again shown in the lead in the polls. So again, no one's really paying much attention to these again. So it's going to be a few weeks of uncertainty now. There's not much going to come out that's going to surprise people. However, we have got a meeting of the European leaders after the election at the end of June. So again, so much uncertainty in the markets. I think we are going to see things go pretty much the same way. You're going to see indices continue to struggle, equities continue to struggle, and the euro, again, I think we're going to see further falls in the currency and further gains in your safe havens such as your German bonds, your UK gilts and your US treasuries, and also the dollar in the currencies. Now in Spain we've still got the problem with the banking crisis. I mean, as much as the government are trying to help the more struggling banks such as Bankia, who have now 90% nationalised, there's no real concrete solution here. You get the feeling that they're still waiting for the ECB to intervene and basically do their job for them. Now we've seen comments from Mario Draghi again today, who said that this isn't an option that they're looking at right now. It's down to the governments themselves to prop up the banking system, to improve systems in the country. And again, it's just further uncertainty in the markets, and you know how much the markets do not like uncertainty, and you've seen that reflected day in, day out right now. Other than that, we've got to look ahead to tomorrow in the US again. We've got non-farm payrolls out tomorrow, key figure in the US. Again, we've had 2 months now where they've come in around 120,000, much lower than expected. Again, they were coming in around 200,000 at the start of the year. So again, further disappointing data. The Fed have put this down to the fact that Q1 was just unimaginably strong, but really, I mean, a third month in a row of poor non-farm payroll data is going to make people think that the US data is just suffering a lot more than they've originally made out. So again, the markets, you've got the FTSE down, you've got the CAC down, you've got the DAX down, and you've got a similar story in the US with the Dow, the S&P and NASDAQ. We'll probably see similar towards the end of the week. And again, you never know what's going to happen over the weekend in Europe. We seem to have constant surprises. So until then, my name's Craig Earl, market analyst at ALPARI UK. Thank you very much for joining us.